Next up, we have two really well-known people in this space. They probably don't need an introduction, but let's bring him on up. Brady Cobb of Sunburn Cannabis is going to be leading a discussion with Lynn Tannenbaum of Advanced Flower Capital Gamma. This is going to be a heck of a good conversation, y'all. Take notes. If we have time for questions, I'm sure they'll get them. Come on up, gents, when you get a sec. Welcome to the stage.
Good morning, everybody, for the fourth time. There we go. Beautiful. Happy 420, everybody. Big day. And happy to be here today with Len Tannenbaum from Advanced Flower Capital. For those of you that don't know Len, he and his firm are one of the leading lenders in the space. They were, candidly, I'm a bit biased. They were my lender on our last deal that I was involved in, where I was CEO, Bluma Wellness, and were a significant and very important partner and a big reason that we were successful. So I'm happy to be up here and get Len's thoughts on kind of the current debt market in cannabis, and more importantly, what's to come with the pending safe banking bill that we keep hearing about over and over again. So before we get into that, Len, if you could just give us a little bit of background on AFC Gamma and kind of what brought you into this sector. I mean, you have a long track record in Wall Street, but if you could just kind of, what made you jump over the wall and kind of participate in this sector?
Look, my background's in cash flow lending. I started over 25 years ago at a small company called Fifth Street, which turned into a $5 billion asset manager. And what we did was we lent over $1 billion a year to middle market companies, not cannabis, but just middle market companies. And what we found through that is that being the conduit of capital between the investors and just regular middle market companies was really a necessary thing, because the banks are very clunky and the banks have a lot of issues. We'll get into what SAFE Act may affect the banks, et cetera. But just normal middle market is a huge business. Probably Aries and Apollo, you probably heard of, and Oak Tree in that business. And that's so that I sold to Oak Tree because the big always win. Took a year off, and as a family office, found the opportunity in cannabis. And the cannabis opportunity excited me because no institutional lender could be in this industry. It was an industry wide open to really discovering where alpha is. And so in the middle of coronavirus, on the back of a napkin with my partner, who was sitting over there, my wife, we really thought about can we apply all the knowledge and institutionalized concepts that we learned from being a $5 billion asset manager to the cannabis industry? Can we bring that expertise, but also that sort of gold seal of approval, and do the anti-money laundering and do the KYC process and follow this FinCEN guidance? And can we be the first listed on NASDAQ? And I had listed 3 companies before, and I said, well, I should be able to figure this out. And with the help of Denton's, we did.
So AFC Gamma, you did get them listed on NASDAQ, which I think is the envy of any public company CEO sitting in here right now in cannabis that has to list on the CSE. No disrespect to my Canadian friends. But at the end of the day, you were able to get listed, and I think that's critical and kind of speaks to your ability to access broader markets. But let's talk a little bit about Safe Banking Act. I began working on safe banking alongside Representative Perlmutter. It feels like 10 years ago, because every year in cannabis is like 5 years. At the end of the day, it's passed the House 5 times. It's now teed up. It got really close in the NDAA back in November of last year. Yep. It's now teed up again for another potential opportunity via the Competes Act, where it's in the House version. It's not in the Senate version again. As a lender, obviously, SAFE would potentially bring a bunch of the institutional lending into the space over time. I don't believe it's immediate, but I think it's going to take a minute with their compliance departments. How do you view it, and kind of what's your plan for SAFE, and how do you as a leading lender kind of view that?
Well, let's step back and give everybody what's transpired over the past week and all the current news of what's going to happen in the legislative environment, which affects all of us. Schumer delayed the big bill. He's going to pivot to safe banking. We have everybody has some pretty good sources. Brady is one of the writers, but we have pretty good sources as well. It looks like SAFE is not going to pass with capital market support, which means that cannabis companies will not be able to list NASDAQ New York, which means we're going to be really in good shape because we'll be that conduit from Verano to still, to the regular capital markets. The good news for the NASDAQ listed companies is it's possible that the biggest issue stopping the institutional investors is something in this stupid SARS report, right? The suspicious activity report. It seems like it's possible that if SAFE passes, and we're calling something called bare bones SAFE, No 280E fix either. Sorry, we'll go into why that's going to happen too. But bare bones safe may eliminate the SARS requirement, which I've talked to some of our biggest investors, including one that has over 100 million with us, and they said that floodgates open for them, according to their compliance, if that happens. That the issue that their compliance officers have is these stupid SARS reports, where they just, as a big institution, right, don't want to file them every single time they wire money to anybody, even us. And that's a real issue. Even though we're NASDAQ listed, still same problem. So it shut down a lot of access to capital, which I think will flow. I think one of the KYC avoidance for the big institutions will be the NASDAQ or New York listing. So I think that will be helpful in giving them the cover as a KYC process to be able to put lots and lots of money to work. So I'm pretty excited that that SAFE could open a ton of capital, including hopefully Visa, MasterCard, more Armored card pickups and things like that.
Well, I mean, as an operator, I can tell you that I'm incredibly excited at the potential for SAFE. It's, from a myriad of reasons, both from a foundational standpoint of being able to access real banking services, being able to access credit card processing, being able to access the ability to not have to deal with all the AML guidance. And I mean, when Len's talking about SARS reports, because the Schedule I substance, even though it's state legal in most instances, you still, on almost every transaction as an institutional lender or an institutional finance company, you're going to have to file a suspicious activity report, and you could face negative actions from your regulators as a bank. That's what has that's our plumbing problem. If you ever heard me on Twitter or anywhere else, that's the plumbing problem that we face as an industry. It's not necessarily that we have bad fundamentals, it's that we have a plumbing problem, and you can't access capital. You have to go through Canada or PINKs for the publicly traded companies, and real institutional capital has an inability to clear compliance because of Schedule I and everything else that flows along with being a Schedule I drug. So ultimately, safe banking would provide that safe harbor. The most important thing SAFE would do, and I'd love to hear your thoughts on this, is it's going to require FinCEN to update their guidance. That's right. The most overlooked thing about SAFE. It does not immediately fix anything. What it requires is that the Treasury and FinCEN department update their marijuana-related business guidance and their anti-money laundering guidance to provide cover for everyone to do business in the sunshine. Is that kind of your thought process is on it too?
And that's why Bank of America, JP Morgan, Wells Fargo, every major bank doesn't do business in cannabis. In fact, we've had cannabis providers and clients of ours lose their credit cards and lose their bank accounts because it just sucks. And that will get changed with this.
I've lost 3 accounts for the record. Just for taking a paycheck.
It's unbelievable. So, I mean, this is pretty exciting stuff. Now, when does this happen? Everybody always prognosticates. Some people bought MSOS calls, back in February thinking SAFE Act's going to pass. It doesn't matter what Congress you did. I know you did. You're one of those people. It doesn't matter what the House does. So don't worry about it. Don't look at a headline from the House. It only matters what Senate does. So it comes out of the first thing you're going to see is Sherrod Brown has to take it out of Senate subcommittee. And as soon as you see that happen, the first hearing on SAFE Act, which has to happen. I mean, you can't have Senate approval of something unless it comes out of subcommittee at some point.
It is a little different in the Senate. It's ultimately they do a roll call vote in the Senate. So on amendments, it's a little different than the House.
Right.
They'll do a roll call vote. It all hinges. It comes back to the same thing you and I were talking about back in November, December. It all comes down to whether Schumer, Booker, Wyden, and his leadership are ultimately going to block it again, or if they're going to let it go this time.
Right.
It truly comes down to those three. Whether they're going to play chicken again and think that they can kind of push it off and wait, it's all going to come down to that. And for me, the timing perspective, as we get closer to the midterms, it's going to get tougher and tougher because I think the Republicans are going to dig in. I kind of see the active period between now and the summer recess to get something done, or then potentially lame duck. But for me, it's this kind of between now and the summer recess is when I see the potential. What about you?
Not at all. I think it's a lame duck deal. I think this is McConnell wanting to get it off of his plate. My contacts are never on the Democratic side, though. I got to say Senator Wyden's my cousin, which is a strange thing, given I'm a moderate to conservative Republican, and Senator Wyden's extremely liberal, and he happens to be my cousin. But it's an interesting scenario. I do think, and you watch Wyden, he does reach across he did on TPP. I was on Orrin Hatch's committee, and him and Orrin Hatch, I was in that finance session where they passed it with 60 votes, and they're very practical people. And there are a lot of practical Republicans. They have 9 Republican votes. They need a few more. They've got 7 maybes. But that's why it's going to pass bare bones. Now, I'm sorry to say, which the really crappy part, because I know my clients are getting killed with taxes. And unfortunately, 280E forces an offset, right? Because you're taking money away from the government. You have to replace those funds. It's just going to be too messy to pass, in my opinion.
I agree with you. I think from an incrementalism standpoint, you got to get the first win. I think the closest thing we have with 5 times passing the House so far, and my vote count on the Senate side, since I began lobbying in DC back in 2015 with Haley Barbour, I only focused on Senate Republicans. And it was a very cold meetings to start. I've been the dubious honor of being thrown out of McConnell's office twice for talking about cannabis. You set the meeting to talk about hemp, and then you bring up cannabis, and you got to get out of here. So at the end of the day, to see the progression that we have, my vote count on the Republicans in support of SAFE on the Senate side is north of 15. SAFE as it is right now, no plus, nothing else. And in my mind, we're going to have to go get something like the HOPE Act, which my friend Dave Joyce is here today. We hope to hear from him and be able to hear his panel. And then I'm working with Weldon Angeles and a group and Jeff Schultz on a clemency program that would provide clemency opportunities for federal cannabis prisoners. So I think it's going to be some combination of administrative action paired with this current SAFE. But on 280E, you couldn't be more right. As an operator, it's painful. But at the end of the day, I think the flip side of that coin, and I am a conspiracy optimist, the flip side of that coin is a lot of these tier 1 companies are performing very, very well in spite of a higher cost of capital and in spite of this 55 to 62% effective tax rate that they have depending on state and federal. So I think there's a bull case buried in there too, that if they're performing as well as they are, generating positive net cash and positive EBITDA now, when those tax rates actually fall at some point in the next 10 years, call it, to a more manageable corporate level, all that flows directly to the bottom line. I think there is a bull case. It's a short-term bear case. It's a longer-term bull case for me.
I agree. I think that, look, if you're really smart about it, there are ways around 280E, and happy to talk to you about that separately. We've introduced them to all of our 17 borrowers or the 25 people we do business with and our friends. I think Green Spoon Martyr really came up with one of the best solutions I've seen. But putting that aside for a second, one interesting thing SAFE Act's going to do is, right, so money's going to come in. Where's it going to go? And what I'm most excited about are the states that are opening, right? We're excited about Connecticut. We're excited about New York. We're really excited about New Jersey, though there's not enough dispensaries in New Jersey. So flower prices aren't going to be great to start, but the lines outside those dispensaries are going to be, 2 hours, 3 hours, 4 hours. But as soon as they can open some more dispensaries, it's going rec today or tomorrow. We're really excited about those prospects, and those companies, the 7 ATCs that have approval there, are going to crush it. Everybody else that has to open there, it's going to be exciting. So we're really excited about that state. We have one client in New Mexico, and everybody seems to cross the Texas border. But the other thing Brady and I were talking about, which I just want to bring up, which I think is a change to the real landscape, and both of us have heard this, is one of the biggest problems in this industry has been Oklahoma. Oklahoma, unlimited license state, produces 10 times the amount and crosses that. Where does that weed go? That's crossing the border. And I am hearing, and I think you're hearing the same thing, that they're going to require metrics. And all these small growers with these licenses don't abide by the rules. And the governor, I think, realizes that this stuff's got to get, controlled. And I think that's going to be good for, all our legal operators in every other state that don't cross the border, that sell within their state, that follow the rules, that pay their taxes. Those are the ones, that I think we need to support as this industry. And I think shutting that governor, we could take a stronger view in Oklahoma. That's going to be a big plus.
Yeah, I think it's just kind of as you see these different states roll out different programs, and then they're doing it with the burden and the anvil that is the federal prohibition still in place. It's interesting to see as it all matures. We're here in Florida today. You're based in Florida. Your offices are in West Palm Beach. I'm obviously a Florida guy through and through, and diving back into Florida. What makes the Florida market, because you've done several transactions in Florida, what makes the Florida market attractive to you?
So Florida's interesting, right? Florida's a limited license state. That's a vertical state. There's 23 licenses, 21 licenses in Florida. You have to grow and sell and produce. You have to do it all yourself. I like that. The legislature held that up, and that's going to continue. There are going to be 22 more licenses eventually if it's not litigated, later this year, and then who knows what. But the first mover advantage is really important, but also understanding the market in general, right? We know who dominates the market, at least for now. That's Trulieve. And then, and she's done a phenomenal job getting first mover advantage and taking full advantage of that. And, I think Curaleaf's doing a good job coming into the market. Verano did a good job coming into the market. You sold your company to Cresco, our company to Cresco, but, Brady, this market better than anybody. I hear you're coming back into it.
Yep, we're coming back in. We press released recently that we're acquiring the MedMen Florida assets, and we're going to go take those and turn them around, and we're excited. As I look at the Florida market, it's always consistently been, over the last, call it 5 or 6 quarters, in the top 5 of sales across the country, with only 650 to 700,000 qualified patients. You compare that to the patient count in some of these states that are ahead of Florida, where they have, even ahead or behind Florida, where they have adult use in place, where they have the full population over the age of 21. It just speaks to the demand in Florida, but more importantly, what does Florida look like in 2024, 2026 when we approach the potential for another adult use push? You would have 118 million annual visitors to Florida. That's why after we left Cresco, our focus was coming back into Florida and doing it with premium retail locations and going to build premium indoor with AFC's help as our lender. So ultimately, for me, I look at this market. The potentials. It goes adult use. I think it's number one, if not number 1 or number 2, right there with
I'm
California.
not sure everybody understands that we missed adult use. So we missed adult use this year.
We missed adult use in Florida in 2022. The Florida Supreme Court did not permit it to go onto the ballot. There'll be another push in 2024. The last polling I saw had it north of 80% far as of electorate support.
For sure.
Our medical amendment passed with 71%. We only needed 60.1. So in that moment, right now we're at 700,000 patients. If Florida keeps chugging along with its normal month-over-month patient growth, it'll be around 1 million and change patients in 2024 as we approach it. Assuming it actually happens, we're then looking at 118 million annual visitors over the age of, between residents and visitors over the age of 21 as customers. That would position it as one of the top 2 markets in the country. And ultimately, I think it gives the opportunity for Florida to really shine. It's already up there.
Yep.
So it's a compelling marketplace, and I'm happy to be based here, and I'm happy to be going back into it. But in the short term, to your point, I'll give a kudos. Kim Rivers has done an amazing job building, not only getting a first mover advantage, but holding it.
Yep.
I think Verano's, like to your point, has done a great job in coming along. I think Curaleaf has done a great job in scaling up. Different approaches, though. It's more of a kind of large footprint and moving a lot of product, not necessarily focusing on the top end of the market, but they've been successful.
But what we're going to focus on at AFCG, we have about $400 million market cap. We're sitting on NASDAQ. We're right now the leading institutional lender. And, what we want to do is focus on those companies that really have those prospects to take advantage of these markets, not too late. And we're really focused only on limited license states like Florida, like Ohio, like Pennsylvania. Connecticut's going to be exciting. New York, we're going to see how it shakes out. We're excited about New Jersey. We backed a few in Missouri, but Arizona is another really nice one. So we're focused on a certain number of states that we understand really well to help our clients grow, but also to help them expand. And I think what you keep seeing from press releases from us is we keep expanding with the same clients and helping them grow. And that's part of what a lender partner should be doing, is that partnership solution, like what we did with Brady. He took money from us, I think, 3 times before we sold to Cresco. And then, each time he wanted expansion capital, each time he wanted to build a little bit different, to build a new tilt up, that takes additional capital. One thing I will say is the market changes, though. Construction costs are up and timelines are up. You all know that, right? Because you're all out there building and growing. And so some of the existing providers with existing infrastructures really have added value, in my opinion, that really hasn't been recognized yet. So really what you want to try to do is stick with existing infrastructure and expand rather than start greenfield. It'd take 2.5 years to do that. So we really help that. We have in-house construction management. We have 31 people that are really dedicated to servicing. Right now, we only have 17 or 18 loans. We're very concentrated with people like Verano, Acreage, Justice Grown, and Nature's Medicine. We're trying to concentrate on that second tier MSO that wants to be top tier with the right capital structure.
That's great. I don't know if we're doing it.
We look forward to working with you again.
As always, man. We bid it out, and obviously very excited to work with you guys. And the last question I would have, I think, let's assume good news. Safe banking eventually makes it through, whether it's my bet pre-summer recess or your bet lame duck. Does that affect how you approach and deal with your current borrowers? How do you plan to deal with that? I think that's a big question I get quite a bit from folks is, what are the existing lenders going to do when that moment happens?
We're going to help our borrowers either way. If you guys can get bank financing cheaper, we'll fall behind the bank. Like, I was a second lien lender for most of my career. I did about $2 billion in second lien loans. We're not afraid of banks. Banks are our partners. The problem is it's going to take a while for them to get there and have the hold size. But once they do, we want your cost of capital to go down. We want you to benefit from that. And we're going to go in there, have our cost of capital drop, and continue to be partners to the industry.
Great. Thanks, Len.
Good to see you. Thank you all for listening.